Worried about who is going to win the election? Concerned what they will do to the economy? You are going to need to get your investment strategy right to weather the storm. Investing during a recession can sound risky, right? You might think it's best to avoid the stock market altogether when times are tough. But what if I told you that a recession can actually be a good time to invest? Today, we'll talk about what you need to know about investing during a recession. First, it's important to understand that recessions are a normal part of the economic cycle. They happen every few years and are usually followed by periods of growth. When the market dips, it can create opportunities to buy quality investments at a lower price. Think of it like a sale in the stock market. But before you jump in, there are a few things you should consider. First, make sure you have a solid financial foundation. Before investing during a recession, you need an emergency fund. This is a separate savings account with enough money to cover 3 to 6 months of living expenses. Having an emergency fund gives you peace of mind and ensures you won't need to sell investments if you face unexpected costs. Now, let's talk about what kinds of investments are smart during a recession. Focus on companies with strong financials. These are businesses with low debt, strong cash flow, and a history of weathering economic downturns. Look for industries that are essential, like healthcare, consumer staples, and utilities. People will always need healthcare, food, and electricity, even during tough times. These sectors tend to be more resilient during recessions. Another option is dividend-paying stocks. Dividend stocks provide regular income, even when stock prices are down. These are often companies that are more stable and established. When selecting dividend stocks, make sure the company has a history of consistent payments. This can provide you with a steady income stream, even in a shaky economy. Now, let's talk about bonds. Bonds are generally safer than stocks, especially during recessions. They offer fixed interest payments and can provide a buffer against stock market volatility. If you're looking for stability, consider allocating some of your portfolio to bonds. Treasury bonds, municipal bonds, and high-quality corporate bonds are all solid options during a recession. Another opportunity to explore is real estate. During a recession, property prices may drop, creating opportunities for long-term investors. However, you'll need to be cautious and thoroughly research the market. Make sure you're financially stable before investing in real estate, as it can require significant upfront costs and ongoing expenses. Now, let's talk about the concept of dollar cost averaging. This is a strategy where you invest a fixed amount of money at regular intervals, regardless of the stock price. It's a great way to take advantage of market dips without trying to time the market perfectly. For example, you could invest $100 every month, whether the market is up or down. This allows you to buy more shares when prices are low and fewer when prices are high. Dollar cost averaging can help lower the overall cost of your investments over time. One of the most important things to remember during a recession is not to panic. The market will likely be volatile, and it's easy to feel nervous when you see your investments drop in value. But it's crucial to stay calm and stick to your long-term strategy. Selling off your investments out of fear could lock in losses and prevent you from benefiting when the market rebounds. Remember, the stock market has historically recovered from every downturn. It might take time, but markets tend to go up over the long term. This is why investing for the long term is so important, especially during a recession. Another thing to keep in mind is diversification. Diversification means spreading your investments across different asset classes, sectors, and industries. By diversifying, you reduce your risk of losing everything if one sector or stock takes a hit. For example, instead of putting all your money into tech stocks, you might spread it across healthcare, energy, and consumer staples. This way, if one sector is affected by the recession, your entire portfolio won't suffer as much. Consider adding international investments to your portfolio as well. Some global markets may perform better than domestic markets during a recession. This can provide another layer of diversification and reduce your overall risk. Now, let's bust a common myth. Trying to time the market is nearly impossible, especially during a recession. You might hear people say things like, "I'll wait until the market bottoms out before I invest." But the truth is, no one can predict exactly when the market will hit its lowest point. Instead of trying to time the market, focus on consistently investing over time. That's where strategies like dollar cost averaging come in handy. If you invest regularly, you'll benefit from market dips without trying to guess when the best time to invest is. It's also important to understand your risk tolerance during a recession. Some people are more comfortable with risk than others. If you find yourself losing sleep over market fluctuations, you might want to consider a more conservative investment approach. This could mean shifting more of your portfolio into bonds or dividend-paying stocks and less into volatile stocks. On the other hand, if you're okay with short-term losses and understand that the market will recover over time, you might choose to invest more aggressively. Whatever your approach, make sure it aligns with your financial goals and comfort level. If you're unsure, consider consulting a financial advisor. They can help tailor an investment strategy that fits your unique situation and risk tolerance. Now, let's talk about your mindset during a recession. It's easy to get caught up in fear and negativity when the economy is struggling. But recessions are temporary, and they're a natural part of the economic cycle. With the right strategies, you can use this time to strengthen your financial position and even grow your wealth. It's important to stay informed, but not get overwhelmed by the news. Focus on what you can control: your spending, saving, and investing habits. And remember, investing during a recession requires patience and discipline. It's not about making quick profits. It's about positioning yourself for long-term growth. So, what's the takeaway? Investing during a recession can be a smart move, but it requires a solid strategy and a long-term mindset. Focus on quality investments, diversify your portfolio, and stay calm during market fluctuations. And most importantly, don't try to time the market. Invest consistently and stay committed to your financial plan. Finally, keep in mind that this video is for educational purposes only and does not constitute financial advice. Always consult with a licensed financial advisor before making any investment decisions. Need to keep your screen looking busy? Sign up for our free email newsletter. Don't forget to like, subscribe, and get notifications for more money mindset makeover content.